Welcome to another episode of Commercial Property Roadshow. You're here with Helen Tarrant, and today I'm going to talk about the top 3 questions people asking me about commercial property leases.
Hi there, this is Helen Tarrant again from another here with our whole team. Wow, it's massive.
And the reason I want to talk about that with you today is because when you're doing a commercial property deal, leases are paramount. It's the absolutely go-to Bible that you use to govern your relationship between yourself and the tenant. And so it's really important that you actually understand the lease. But most people ask me about 3 things. Firstly, outgoings, who pays outgoings, the type of lease it is, and who pays what and what you should be responsible for. So what are the tenant and the landlord, everything, who's responsible for what. Number 2, they ask about all the terms and the length of the lease and how long and guarantees and everything else that constitutes the baseline of the lease. And number 3, what happens if the tenant goes bust and defaults under the lease? Well, they seem to be 3 really straightforward things if you know what you're looking for in commercial property world. But if you're a first-time investor, it can be very, very confusing. So I'm going to demystify the top 3 questions about commercial property. So number 1, who pays what? So in commercial property, there is what we call a net lease, double net, triple net lease, right? So working backwards, a net lease is when your tenant pays the rent plus the outgoings, but they may not pay for land tax or management fees, or they might not pay for, if they're in a strata property, they might pay for sinking fund, but nothing of the capital nature. So they might not pay for sinking fund, what they pay for admin fund, right? So that's called a net lease, but all of the other capital expenditures like taxes and everything else, you have to pay for. So that's one type of lease. The other one is a double net lease. Double net lease is when your tenant comes in and the tenant pays for everything, right? So they pay for land tax on a single holding basis. It's got to be a single holding. You can't lump it together with your other properties that goes over the land tax threshold and you have to get your tenant to pay. No, land tax is based on single base holding. Management fees, all of the other statutory outgoings like rates, water, sewerage, insurance, they also would do in strata, they will pay for admin and sinking fund. So they'll pay for all of that and it becomes what we call a double net lease. And that is what you'll see often in the marketplace, is a double net lease. But then there's one level above that, which is what they call a triple net lease. And that usually happens with national tenants, international tenants, government type tenants, as well as your franchise type tenants. And this is why people want to buy something like a petrol station or a childcare center or a Centrelink and all of these things, is because it is a triple net lease in essence. So what it is, they'll pay for all of the things that's in part of the double net lease. So they'll pay for all of the outgoings, plus what else they'll pay for is repairs and maintenance. So let's say the ceiling comes loose and like the ceiling tiles comes loose and you have to replace it. The property manager goes and replaces it, emails it to your emails the invoice to your tenant, or puts it a part of the outgoings invoice, and your tenant has to pay for it. Things like if like the fence is broken or the garden needs maintaining, or that let's say that you've got an outdoor area and the pavement is broken, then they're on a triple net lease. So the tenant pays for that, including in some instances what property managers like to tell me, including the stamp they put on the envelope to send to the tenant their invoice. So that's what a triple net lease is, that your tenant covers absolutely everything. The money goes into your account, you just pay the bank, and the rest is absolutely for you to keep. So that's it for leases. So now, depending on what your actual lease says regarding outgoings, you can work out what your tenant pay and what you don't pay and what you do pay. Now, the area to look for that is usually 2 areas. The schedule, which could be at the back of the lease or the front of the lease, and it details just in brief summary what the tenant's going to do and what you're going to do. There's an outgoing section. It's going to say whether the tenant pays 100% of the outgoings or a proportion of the outgoings compared to their lettable area. And you go to the definition section of the lease and you look at the definition of how they define the lease, defining the lease what the outgoings are, and they'll have a list of the outgoings the tenant's responsible for. Now, there will be a section on outgoings and how that's paid, but the main thing is you want to define exactly what it is, and that's the 2 areas to look for in your lease. You can always get that confirmed with myself or any of the professionals you work with, or your lawyers or accountants or solicitors, right? So that's who pays who in the lease. Number two, we talked about that people ask, and number two question that people ask is, the terms and the foundations of what makes the essential clauses in the lease, apart from who's paying outgoings. Well, lease terms are like broken up. When people say I've got a 10-year lease, I always question that. Is that 10 years in the initial term? So do they sign up in 2021 and their lease expires in 2031? Or do they sign up in 2021, their lease expires in 2026, but they have an option till 2031? Because for me, that is not a 10-year lease. That's a 5-year by 5-year lease. So it's a 5-year lease, what they call a term certain, or they call the initial term of 5 years, plus an option for 5 years. Yes, overall it's a 10-year lease, but it's not a guaranteed 10-year lease. And sometimes they fudge that a little bit in the agent's advertising. So what you actually will see is the agents will say, hey, it's a 10-year lease, but no, it's not a 10-year lease. It is actually a 5 by 5 by maybe 5-year lease. So they call it a 10 or 15-year lease. So really that lease is a 5-year lease with 5-year options. And that means that for 5 years, your absolute tenant is going to stay there. After that, the tenant has the option to stay for an additional 5 years, or they can choose not to take the option and negotiate with you on a separate lease and get into a different lease after that, or shorten the option, or just simply take up the option, right? Or they might just decide to vacate and you have to find a new tenant. So that's where the option confuses people. But it is a good sign. If your tenant wants to have a 5 by 5 year lease, it's a good sign that they want to take up the option and they have long-term planning on a property and where they want to be as a tenant in the future. So that's good. The other thing is obviously about rental, you've got your rental bonds, so your deposit and your bond that your tenant is paying compared to a bank guarantee. Now, a debate in the market is, do you want a bank guarantee, which, there's assets backing it and the bank is issuing at any time you can cash that in, or you add a cash bond from your tenant? Usually the cash bond is up front, and I prefer a cash bond over a bank guarantee because I often lose my paperwork, but also that, you don't have to track it, and it's actually real cash. You can put it in an offset account, saving you interest from day one, whereas a piece of paper is not going to. But people have varying views. My view is that I just prefer a cash bond. Now, the other thing is personal guarantee or not personal guarantee. Some people prefer a personal guarantee over a bond. Sometimes you get a lease that has a bond and a personal guarantee. Sometimes you get a property that has a bond, no personal guarantee, or you have one that's no bond, personal guarantee, right? Which one do you prefer? Well, obviously you can get both, but often the circumstance right now, you can't get both, right? So what I would prefer is, I always prefer a cash bond because you can put it in the bank and there's money there and it saves you some interest, over a personal guarantee. A lot of people, especially lawyers within the legal industry, prefer personal guarantee because their word is their bond and they feel like there's substance. But I can tell you that unless your tenant is a sophisticated tenant, or unless your tenant actually have assets, that personal guarantee may mean nothing, right? And the reason for that is, if they don't have assets behind them, if the asset is an asset protection, even if they default under the lease, there's nothing you can go after them. And it can be really expensive for you to go after them, where you could just take their deposit, and the deposit on a large premise could be hundreds of thousands of dollars, or at least $20,000, $30,000, $40,000 on a small property. And off you go. You actually then just get on with your life, re-tenant the property, and actually saves you costs in the long run. But that's just my 2 cents worth. You make up your decision whether you prefer a bond or a rental guarantee. And really, ultimately, that's what the foundations is to work through the rent, the bond or personal guarantee, or the bank guarantee, and work through when you're getting your rental increases and how much the rental increases, whether it's a CPI, which is based on consumer price index, or it's a fix, whether it's 3%, 4%, or 5%. Which is good, which is better? Look, there's huge debates in the marketplace. CPI at the moment is the favorite because we're going to see high CPIs, but traditionally it's been the fix. And if you're managing yourself or you plan to self-manage, fix is actually a lot easier. And I guess it gives you defined growth. You can all define how much cash flow you're going to get next year, how it compounds as well. So that's also the additional benefit. Now, finally, we come to number 3. The third question, which is about what happens when your tenant defaults on a lease. Now, commercial property works different from residential. We all know that. But the reason that it works different from residential is that in residential, you have to go through tribunals, make dead tenant. It's always on your tenant's side. In commercial, apart from you having a retail lease, so retail tenants act on different legislation. But if you just have a normal commercial lease, it's absolute the tenant has to pay rent, right? You have to pay rent. If they don't pay rent, you can kick them out. And it can be simple as that. Basically, lock up the premise, change the locks, kick them out, and then you resume the premise, you can then terminate the lease and re-tenant the property. But you can also sue your tenant for the balance of the lease, because they owe that balance of the lease. And if it's under a certain amount, it's a small claims court. If it's above amount, it's, you know, in a different other courts, and you have to get solicitors, and of course you have to get legal representation to help you get that money back and chase the tenant. But you have to mitigate your loss, which means you have to actively seek a different tenant for the property, right? And that's what here it comes into, that you have to actively do that. So if your tenant, and this is where the swiftness comes in, if your tenant is defaulting in rent, yeah, let it go for a month maybe, and you go, oh, you're standing in circumstances, something happened, you might be sick. If it continues on, then you might be going, you know what, call it quits, work out a settlement with your tenant. If that doesn't work, kick out the tenant, resume the lease, basically, you know, get hold of the lease back and terminate the lease, start tenanting the property, start going out and getting a tenant for the property. In fact, you can start marketing for the property, especially in a well-to-do area, in a great area. You might find that you might tenant with a higher rent anyway. You bring the new tenant in, and then you can work out a settlement with the other tenant. This way, it's a proactive approach. When the tenant is defaulting in rent, yes, the tenant has absolutely liability against the lease. You have to minimize your loss under the lease, but ultimately, it's money and cash flow in the pocket, and you have to be proactive. You have to drive the process. You have to make sure that you can tenant the property as soon as possible, because it's all about cash flow in the pocket and less about what you should be doing legally. Yes, there's a legal process. You have to give them a breach notice that allow them 7 to 14 days to remedy the rent losses. You can lock the premise, and obviously, if they pay up rent, you have to give them back. You have to open up the premise again. There's a whole raft of things you can do, but the most important thing is that it is about being proactive here, and really making sure you minimize the vacancy period by, you know, engaging agents, going out there with marketing, talking to your tenants to come to an equitable solution for both of you. Because if you go to court, it's going to be very, very expensive. You're going to try to avoid that. So hopefully that's covered all of your questions, or the main questions on commercial property leases. If you want more information, if you want someone to just help you dissect where you are at the moment, where you want to go, you want someone to help you because you have some lease issues and you just want to reach out and get a professional voice, reach out to me, helentarrant.com, or helen@commercialpropertycashflow.com.au. But don't forget, subscribe, hit the bell, keep watching for upcoming videos, and send me information if you want new topics as well.